Good morning, everybody. It's Monday. It's holiday week. It is going to be a beautiful. There we go. Getting everything going. Nobody? Any sound? Can you hear me? I'm talking. I'm struggling this morning, guys. Yes, no, no, no volume. Well, shit. All right, gonna try it again. Can you guys hear me now? We are trying. I'm back. Anyone have volume? I'm talking. Nobody can hear me. You can hear me, Izzy. All right. Thank you, somebody. So, Izzy, you can hear me, guys. The rest of you, help me out. Give me a Y if you can hear me. I am being riddled with technical problems this morning. I want to make sure you guys are getting it. Nobody? Hold on one second. Okay, you will be kicked. Please return. Disconnect, disconnect. Close it out, bring it up. Sorry about this, YouTube people. Ah, we were doing so great this morning. No worries. Let's start the stage. Let's call it I'm back. Get some stuff going here. All right, here we go. How's that? Did that get us? Are we there? Do we have volume now? Is it my headset? I mean, my goodness. Andy, you got me? Awesome. Says my microphone is working. Give me a Y, guys. Let me know I'm here. Good morning, and the cool kids. Somebody other than Andy V. Yeah, Jerry, we're good. Awesome. Woo. Man, it's been a challenge this morning. Now it's just nothing but the good stuff. I have rebuilt all of my workspaces. Everything on TradingView had to be reloaded, rebuilt. Everything on NinjaTrader had to be rebuilt. Um, that's okay. That's okay, because you know what? We made it. We're in the morning. We're going to have some fun, guys. We're going to check news. Today is Monday, November 24th. Welcome to the holiday week. Um, I try not to create expectations based on the holiday, but historically, if we were to use historical as a potential for the old what's going to happen this week, it's a lower volume week. Right now, the markets are moving great. I'm going to bring them right back up. Um, Tuesday, there's a lot going on. We'll see that tomorrow. Wednesday, day before the holiday, John Novak has already made the decision, guys. There will not be a class. So there are two classes this week. We're going to do Monday and Tuesday. And one thing that I want to do, guys, since we do have some new people, since it is a short week, We are going to go through the 101, which means that we're going to talk about the very, very basics this morning. And I do this for one reason, and one reason only. Whoops. I am trying to get everything up. We're going to focus on learning to read indicators this morning, guys. Whoops. We're going to focus on getting the slideshow on the correct monitor this morning. There it is. I love it, guys. We're going to talk about chart reading. And it's really something that we talk about each and every day, whether we are actively watching the market or whether we are historically going back and looking for patterns, guys. Everything that we do in this room is stemmed from a chart read, if you will. We're going to talk about 3 rules. And guys, there are 2 platforms that we're going to talk about. We talk about NinjaTrader. We're going to do that one first. I've got more users in NinjaTrader. New users tend to lean on it first. And it's 3 rules, guys. That's it. And the 3 rules happen on only 2 charts. And the whole goal is to be able to look at your charts and recognize advantages. So we're going to break down those 3 rules and the advantages that they create, because the advantages become your trade. When we get excited about becoming a day trader, when we start looking to, I'm going to get into the markets, I'm going to trade futures, the first thought is, man, I'm going to make some money. And hopefully everybody in the room does, guys. But the money is a result of the process. And we teach the process. We teach the patterns that you'll be able to prove win more than they lose. And what you're going to find is that 90% of your day is waiting for these patterns to materialize, waiting for these advantages to come into play. About 10% of your day is actually trading. And I know that that's a little disheartening for a lot of people, but guys, there's not a lot of jobs that offer $1 million a year potential where you only have to be active maybe 35 minutes a day. I mean, think about it. You're going to understand through your chart reading where the market is likely to continue, where it's likely to go, and where it's likely to stop. And I really want you to latch on to that word likely. One of the great things I think about day trading is I am never saddled with the burden of having to know what the market is going to do in order to make money. So trading becomes about probabilities, and you're going to take these likely to go, likely to stop, and likely to continue concepts. You're going to use them as ways to enter, ways to manage, and ways to really embrace the 90%. Advantages are everything that we do, guys, and we focus on 3. We focus on the advantage of momentum, we focus on having a clear path, and we focus on defining the entry, making sure that it is repeatable, that you can prove that it wins more than it loses. And each individual advantage pieced together creates a high probability trade. My goal and my hope for you is that you focus on these individual parts to give yourself the highest chance of success. They say confidence comes from the memory of success. Once you can do this, and I'm talking maybe 3, 4, 5 days to really understand it with a little bit of study, guys, you're going to recognize when one of those advantages goes away in a potential trade, and you won't say, dang it, no trade. You'll say, whoa, this is a medium probability trade. I might have to manage it a little more assertively. I might have to get out a little quicker, get to break even a little sooner. And you'll also notice when multiple advantages go away that your gut tells you, hey, don't take this trade. There's no reason to latch on to hope when there's so many opportunities in high and medium probability. You're going to be in control of the entry. The only thing you will ever be in control of is whether or not your rules are met. But when you know what's working for you and what's against you, it's going to help you make decisions, not only on entering a trade, guys, but how aggressively you may need to manage it. So the first hour has literally been the first hour for the last 5 years that I've been teaching, guys. We're going to talk about the rules. We're going to talk about the rules for the trade. We're going to break them down individually. We're going to see pictures of them. We're going to talk about them, and you're going to have the opportunity to ask if you have a question. Everybody can simulate. NinjaTrader or TradingView, there is a zero risk scenario where you can begin to study and learn these patterns, where you don't have to create the anxiety or the adrenaline or all the emotion that goes with trying to make money. You can just practice the patterns. The fastest way to get to where you want to be is post in the room. So when you take a trade, every time you enter the market on simulator, brand new user, you're going to go back to those three advantages. You're going to talk about momentum, you're going to talk about path, you're going to talk about entry on your chart. And my hope is that you give me the opportunity to give you a private session by posting it in the room. So when you take a trade and you post it in the room, what's going to happen is you're going to say something clever like, check this out. This was a really nice S&P trade. It was a weak top, but the triggers rolled down. There was a lot of momentum. That's that first advantage. The path was clear. There's that second advantage. And then just pull back to an area inside of triggers. And Pete says, you know what? I missed my best entry. I had to reload my coffee, but they came back for me. And I took the trade. And this is beautiful. And what Pete did is Pete said, Mark, look, this is what I saw. This is what I did, where I did it, where I exited. Did I do okay? Did I follow the rules? Was I latched onto the plan? Did I have the advantages? And in those, yeah, absolutely, he did. It was wonderful. But if there was a challenge, we'd discuss it. If there was something in the way that could have created problems, we would discuss it, guys. And I'm not the trade police. What I do is I say, hey, I see what you saw, but here's how you can see it better. Here's how you can do it better. Here's how you can reduce risk. Here's how you can maximize profit potential. And guys, every private session between the two of us is a way for you to grow and get better. Post in the room lots. The people that post the most typically get to where they want to be the soonest. The second thing is simplicity, guys. There's no reason to look for every possible opportunity in the market as a brand new user. It'll be overwhelming. So I hand you these plans, and I'm going to drop them in the room right now. One of them is for TradingView. Whoops, the other one is for NinjaTrader. There we go. Let's get those in there. And these plans, I'm going to read it out loud, are stepping stones in your learning journey. So if you're brand new with me, guys, this is like the beginning. This is the first trade, not the only trade. But these trades are designed to teach you to read your indicators. They're designed to teach you to optimize your chances of success. And then it's going to be through the simulations, study, class feedback, and practice. You will ultimately write your own plan, guys. There's a million ways to use the software. I hand you the highest probability way so that you can grow outside of it. We're going to give you the analysis, the rules, the coaching. It's going to be up to you to take pictures, to post in the room, to learn these patterns. Another easy way to start to drill them into your psyche is take the spreadsheet that I gave you. For NinjaTrader, it's got the basic rules. It's got those strong triggers, that clear path, that high probability trend trade entry, those individual pieces that you will put together to create a trade. If you're looking at the TradingView journal, it's the same thing. It's got the pictures of the trades, management, no more shorts, no more longs. And then both of them have a trade tracking sheet, guys. And this is kind of the second part to getting to where you want to be. Track your progress. As you take a trade, drop it in the room. Talk about what you saw. And then make sure you fill out the feedback from class area, because your analysis and my analysis may differ a little bit. I may say, well, you almost had it, but here's kind of where things went south for you. But don't worry. Here's how you fix it. And that's my promise to you, is I'll give you everything in my arsenal to help you get to where you want to be. So we're going to start with NinjaTrader. It's only 3 rules. That's it. Don't make it harder than it needs to be. Guys, each rule, when true, creates an advantage. Momentum, path, and entry. Rules 1, 2, and 3. Rules 1 and 2. Guys, this is your foundation. This is your core. Once you understand how to identify strong triggers, and when I tell you this is a 3 to 5 minute lesson to really understand the look, you got to believe me here, because momentum is the easiest lesson you're ever going to get. And then when you learn how to couple a market that's going to be difficult to stop with absolutely nothing in the way, life is amazing, and it's time to go define your entry. Your first entry is for a trend trade, guys. And all it is it's a flow chart. It says if I have strong triggers, then I'm going to look for termination conditions, and if none are present, I'm going to go define my entry. And guys, these three rules only take two charts to define as true. So your large chart is the first chart. It's a big chart. It's a slow chart. It's a very broad stroke of a brush, and it's actually kind of difficult to see. I just unplugged my headphone. Um, it takes one bar. That's it. It takes the most current printing bar. You're going to be able to define direction, momentum, and areas. Rule number 2 and 1, I got ahead of myself, are met on just one bar. And once those rules are true, we're going to go to the smaller, faster chart. And inside of this one bar, when the rules are met and you have the perfect trend trade, you're going to see a retracement, which is a small movement counter to the underlying trend. You're going to see a bounce typically from an area inside of triggers, and you're going to see continuation. All of this on the small chart happens inside of the one bar, giving you those first two advantages, guys. And you're going to take this pattern and you're going to be able to call it the highest probability trend trade. We use these two charts because it's a reminder that we're not in charge. The large chart is the large crowd, guys. These are the men and women, the institutions, whatever you want to call them. They create trends. They establish momentum. They react at key areas. And your plan is designed to have you embracing the idea that your position means nothing. That you're going with the flow, that you're allowing the people with the money and the influence to set the tone, and you're just going and doing what they're doing. The small chart is like a small crowd. These are your fighters. These are the people that create that little retracement. These are the people that like to buck the system. And the great thing is, hate to celebrate somebody's failure, but they fail typically 70 to 80% of the time, which means that when you are following the large crowd momentum, when there's a clear path defined by the people in charge, and you can pinpoint through rule number 3 the failure of the small crowd, guys, you're putting yourself in a position to win up to 70 to 80% of the time. And that's why we use two charts, and we're using indicators on both charts. So here's your indicator review if you're learning the software. These are areas. Large chart and small chart have the same areas, same look, same names. All you need to know is the names. I call them horizontal lines on a chart. There are divergence highs. It's a magenta line. It prints off of a pivot. And basically it means that the buyers were in control. The market was going up and the sellers said, nope, we're stealing your momentum and pushing down. You're going to see that magenta line. You'll see a cyan line from a low. Divergence is a loss of momentum, guys. So in a market that is screaming, divergence means they're losing a little bit of their scream. You're going to see Fibonacci resistance, Fibonacci support, yellow one-to-ones, which could behave as resistance or support depending on the direction of the market. These are like fibs in the moment. You're also going to see a midband. The midband's color-coded for you guys. When it's green, price is above it. It may behave as support. When it's magenta, price is below it. It may behave as resistance. So you don't have to know how Fibonacci is created. You don't have to know what a MACD is to recognize divergence. Just recognize the names and understand them. There's a magenta high, magenta low, support, resistance, one-to-ones. You're also going to have trigger lines on both charts. And guys, trigger lines are 90% of the load-bearing indicators. You're learning to read triggers, guys. There are small triggers. They're two solid lines. They're a fast-moving average. And there are large triggers. It's two dashed lines. And they're a slow-moving average. Both charts will have trigger lines. On the large chart, it'll define rule number 1 as true using momentum, strong triggers. You're going to use the trigger lines at key Fibonacci areas to define them as termination conditions, keeping you from trading into an area that could stop the market. And you're also going to use these large triggers on the small chart to define your amazing entries, guys, because price returns to a moving average. It's regression of the mean. We're going to use that concept for accuracy. But before we ever get to entries, we've got to get through rules 1 and 2. So I'm going to break them down. We're going to talk about what they look like. I'm going to encourage you guys, if you feeling like you're getting a little stumped or falling behind, hey, good morning, OG. Just go, hey, Mark, do me a favor. Repeat that. Go find me a different example. That one didn't click. Can we talk a little more about it? The answer is always yes, guys. I try to teach the room from the lowest common denominator, if you will. I try to teach the room. Some of you older people may remember newspapers. It was like a big sheet of paper with writing on it, but they wrote them for 7th grade reading comprehension, not the people that were typically reading them, because they didn't want anyone to get left behind. I try to teach the room in the same fashion, assuming that you're brand new with me, that you don't have a basis, that there is no foundation, and we're going to create it together. So rule number 1 says that the large chart must have strong trigger lines. It takes one picture to teach this lesson. Small and large triggers. And guys, when the background on your large chart is green, the trend is up. I'm looking for rules to be met for high probability trend trades long. When the background is red, the trend is down. I'm looking for rules to be met for high probability trend trade short. That's it. And the only way in an uptrend that I can have strong triggers is if both my small triggers and my large triggers are green as well. If the colors don't match, I don't have strong triggers. And then the look for strong triggers is only one look. When your small triggers have broken above and away from the large triggers in that uptrend, it's that space. Whoops. It's that space created between the two. That's what lets me know I have strong triggers. And the same is true in a downtrend. All the colors have to match. And when the small triggers break below the large triggers, when there's space between the two, this is your strong trigger look, guys. It is always your strong trigger look. It doesn't matter if it's a little bit of space. It doesn't matter if it's a bigger gap. As long as you can see daylight between the smalls and large, you have strong triggers. Hey, good morning, Andy. Goals met already, 9:22 a.m. I love that. Strength. When I have strong triggers, guys, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is one of the annotations you're going to see on charts in this room all day long. OFM. And guys, this is the look that pushes a market in the direction of the trend. This is the look that we lean on to break key Fibonacci areas. And man, this look is even going to cover some of the mistakes that we all tend to make as brand new users. It takes one bar on the large chart. The most current bar lets me know whether or not I have momentum. So guys, I'm going to ask you real quick, please give me a Y or an N. My small triggers are red. My large triggers are green. The colors don't match. I can instantly say I don't have the advantage of momentum. Does that make sense? It really is that easy. If this market looked like this, smalls above the large, space between, most current bar, the answer is a resounding yes. This is a market where the odds are favorable for it to continue in the direction of the trend. And what you'll notice is that odds favorable momentum is what we're looking for to break areas. And odds favorable momentum really pushes a market. But when those small triggers work their way back inside of the large triggers, that's what we call a weak trigger look. So if there is no separation between the two, there is no strength. And if there is no strength, anything can happen up or down. So as a brand new user, let it be that black and white. Let it be that simple. You either have strong triggers or you have weak triggers, and only one of those looks means that rule number 1 is met, and it's time to go look for rule number 2. Can you guys give me a Y in the room if you're comfortable with that lesson? Separation is strength. No separation is weakness. That's usually a pretty easy lesson for most. Now, momentum is outstanding, guys. Momentum is the first thing I look for a reason. But a termination condition trumps momentum very often for the new user all the time. Termination conditions are Fibonacci areas with the potential to reverse the market. I like to say on your large chart, a horizontal line is where decisions are being made by the people in control, guys. This is where the large crowd sells and buys, where the buyers and sellers of the large crowd fight one another. And these areas can call turning points. So there's a recipe to know when you've lost your advantage. There's a recipe to know when it's time to pump the brakes, guys. When a termination condition is present, you won't have room to profit targets. You won't have a clear path. So we're going to define those areas on a large chart as a termination condition using a little two-step process. And the first one is we're going to let the large crowd get to the area. And the easiest way to say that is price reaches an area. Dynamic Renko bars come up and run head first into Fibonacci resistance or even yellow 1-to-1s or a divergence high. Lines on a large chart. Once price gets there, I want you to ask yourself, where are my triggers? If all 4 trigger lines remain below resistance, resistance is a termination condition. And what that means is that this area could create an untradeable bounce that would pull you out of a long position. This area could create a full reversal in the market that obviously would pull you out of a long position. This area could even break. And the reality is I never know what the reaction's going to be. So if price reaches an area, this is what it'll look like live, and my triggers haven't gotten above it, if they're all below, rule number 2 is not met. And my job is to sit on my hands and wait for the reaction rather than trying to predict it. One of the most dangerous words that you can ever utter as a day trader is should. It should break. It should reverse. You never know. So if price reaches an area and no triggers get above resistance or below support, your highest chance of success, the most advantageous way, is to do absolutely nothing, to wait, to sit on your hands. Because when price reaches a fib and the triggers don't break, that's exactly what could happen. And when price reaches a fib and the triggers don't break, that's exactly what can happen. Oh my gosh, it's just over and over. Price reaches a fib and the triggers don't break, and look at the reaction. And guys, it's so consistent. And where's some fibs? We ran out of fibs, but that giant move down came from price reaching Fibonacci resistance and not one trigger line above. They always say, what is it? Buy low, sell high. This is the recipe for high and low, guys. Price reaches, where are my triggers? But areas do break. We talk about momentum being able to break areas. So let's look at what it looks like as an area breaks going both directions. And I'm going to break it down in a probability standpoint. So if I am not in a position, if I'm not already in a short trade and price reaches Fibonacci support and all of my triggers remain above, my job, seeking an edge, my job in insisting on advantages, is to just do nothing, to wait for the reaction, to say it's okay, I'm going to relax for a second, let's see what the large crowd has in store. Now, if the small triggers absolutely smash through the area and I get one line of the large triggers through with momentum, well, this area has the potential to break, guys. This is what we call a 50-50 look. This is the second trade in that super high probability plan that I give you. And this look relies on the potential of that area to break, but it's not high probability because the path isn't quite clear. The path is not considered clear until all 4 trigger lines get below the area of support. So when price reaches, we're done with price. Trigger lines tell the story the same way they do with momentum. No triggers, no trade, relax, wait, see what happens. 3 trigger lines through with momentum. All right, this is going to be the majority of my trades working off that potential. But man, when 4 trigger lines break through and support is broken, it actually behaves as resistance. And my path is clear. And my path remains clear. And it remains clear until I hit the next line. And then when I hit the next line, guess what? We go right back to number 1. So in an uptrend, it's the exact same thing. First, it's a termination. Guys, every line is a termination condition in the moment. If you're not already in a position, it's all right. Relax, wait for the reaction. You get 3 of those trigger lines north of resistance with all that momentum. That potential is outstanding. You may find an opportunity to take a trend trade based on the potential. But it's not until all 4 trigger lines get above an area of resistance that resistance is broken. It behaves as support. And guys, your path remains clear until you hit the next line. So the easiest trades that you're ever going to take are going to have odds favorable momentum. Price will not have reached an area, and we're clear on the previous, guys. And with all of this momentum and nothing in the way, that tail on the large chart, that's your retracement on the small chart. That's your entry. You'll be able to pinpoint where that tail is most likely to form, leaning on momentum and clear path. And guys, the expectation of the high probability trend trade in a perfect world is it heads to the next key Fibonacci area. Is everybody good with that on termination conditions? I mean, crude oil just put on an absolute clinic, didn't they? Resistance to support to resistance. Weakness is where the reversal comes from. Weakness at a fib is where it reversed this morning. And look what it did. Right into support, and the triggers don't break. There's that untradeable bounce that we referenced. One of the great things about the software, guys, is you'll know when your advantage is present. You'll know when the momentum is there. You'll know when the path is clear. And the flip side is that you're also going to recognize that there will be times when your path isn't clear, when the momentum isn't strong, guys. And this is 90% of your day. And 90% of your day is doing nothing, waiting. And guys, it's okay because the futures markets trade on average $220 billion an hour. The S&P market trades 174 million a day on average. NASDAQ's up around 269. And there's so much movement. You don't have to be in every move. You don't have to latch onto every tick. You don't have to be the first one in or the last one out. You just got to wait for your best of the best. So is everybody good? If price reaches an area and none of the triggers break, it's okay to do nothing. Give yourself permission to do nothing. How we doing so far? Kerwin, I know it's like day 2. Day 2 is typically easier. Day 3 is where the super click starts to come in. Price reaches, no triggers, no trade. I think that's one of the easiest phrases to help out with that. But the cool thing is, guys, is if you do have momentum, if your path is clear, it's time to go define an entry. It's time to recognize the point where the market is most likely to continue. And we're going to do it on a smaller, faster chart, guys. And it's so specific that you're going to use a limit order to buy or sell a pullback at an area inside of triggers. And that's your phrase. To define an entry, you need to learn the phrase, and this takes all the guesswork out of entry. I'm going to cover this. I will buy or sell a pullback. What's a pullback? A pullback is that little retracement down when everything on the large chart says up. I will buy or sell that pullback at an area, at a fib, at a mid-band, at a yellow 1-to-1. And guys, the fib is not more important than the 1-to-1, is not more important than the mid-band, is not more important than the fib. They are all equal in the small crowd's eyes. They can all create a bounce. But the most important part of this phrase, guys, is that those areas are inside of large triggers. And your small chart will have two sets of large triggers. It'll have these stepped triggers. Those are just the large triggers from the large chart. And it has the smooth triggers. These are your small chart large triggers. And there's this gospel truth in mathematics that price regresses to the mean, returns to the moving average. So we're going to use the trigger lines to define the retracement zone. We're going to use the areas to define the bounce. And you're going to use a limit order and wait for the small crowd retracement to get there. So this is your entry pattern. It's the same pattern all the time. When everything is up, when the trend is up on the large chart, when the path is clear on the large chart, when the large crowd, let's do this real quick, whoops. When the large crowd has said up fast, and nothing in the way, we're going to go to the smaller, faster chart, and we're going to let the small crowd do their thing, guys. And it begins with a reversal bar. And the reversal bar begins the pullback. It's not the entry, it's the beginning of the fight. You can gauge where the fight is most likely to go using the triggers, large and synthetic. Triggers define the retracement zone. It's the areas within triggers. Fibs, midbands, or yellow 1-to-1s, this is where the market is most likely to bounce and continue in the direction of the trend. I don't know if it's going to be the midband. I'm not sure if it's going to be the 1-to-1s. So I'm going to activate a limit order at whatever area is closest to the reversal bar inside of those triggers, the highest point of support inside of the triggers. And what I'm going to say is that with all of these advantages, this is where the small crowd is most likely to fail. This is where I want to enter my trade. Now, I go into this trade knowing fully that the market is most likely to retrace somewhere from the top to the bottom of the triggers. That it's most likely to bounce somewhere from the highest to lowest point of support. So as long as I am inside of that retracement zone, guys, my advantage is still in place. As long as I haven't gone below those trigger lines, my advantage is still in place. Rule number 3 is still in effect. Your initial stops will be placed 4 or 5 ticks below those trigger lines, because every now and then, any trade that typically wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. Your stop defines where the market should not go if this is going to be one of those winners. And you will take the occasional hickey, but it doesn't have to be a big one because of the precision. There are no entries from beyond the trigger lines, guys, because once you get below those trigger lines, you don't know if, when, or where that market's going to continue up. Now, I encourage you guys, learn that language. I will use a limit order to buy or sell a pullback at an area inside of triggers. You will call your shots when the market is all the way over here, and you will be sitting, waiting, rooting for the small crowd. In a downtrend with momentum and clear path, reversal bar begins the pattern. It's not your entry. You can define right where the retracement is most likely to go using the large trigger lines, somewhere from the bottom to the top. Most likely to bounce and continue in the direction of the large chart trend from the area inside. In this case, it's a mid-band. There is one line, limit order goes a tick or two below, and then you put your hands in the air and you say, I've done all I can do. I've followed my rules. I have my advantages. The edge is there. If the small crowd comes and gets me, I'm in this trade. And if they are capable of pushing beyond those areas, beyond that retracement zone, I will exit 4 to 5 ticks beyond those triggers. That's where the market should not go. That language becomes very important. Any areas where the market should not go are not areas for entry, because you don't know if, when, or where that market's going to continue down. And guys, all it is a pattern. with momentum. Does the first down bar signal the divergence line? Nope. So actually, divergence doesn't print until about 2.5 bars deep. So you'll see the market run up, and it'll literally be about right here, OG, when you finally see that divergence line. Whether it's the big chart, 2.5 up, or the small chart, 2.5 down. But divergence isn't a part of your equation on the high probability trend trade on the small chart. Typically, you'll see the divergence print. Small triggers may be a little bit behind it. But remember, your momentum is defined on the large chart. So when these colors don't match, that's okay. That little loss of momentum hopefully is getting us back to the perfect entry. Does that make sense? And divergence on the small chart isn't one of the rules. So hopefully that little loss of momentum on a small chart is exactly what we need to get back to that perfect entry. Does that make sense? But divergence and trigger lines, they operate independent of one another. Trigger lines are a moving average. Anticipation of the trade, you don't need either. What you need, and watch this, watch how simple this can be. Do you see the momentum on the large chart? Small's above the large space between. And we'll go find an example. We'll go find an example from this morning. It starts with momentum on the large chart. And then it goes to the potential to break at least on the large chart. And then once that happens, I'm done with the large chart. And I can use the language. Watch this. I'm going to do it again because I think repetition creates recognition. I'm going to buy a pullback at an area inside of triggers. Notice that I don't reference divergence. I don't reference small triggers, right? I don't reference terminations on the small chart. This is it. That's all we're looking for because the large chart gives us 2/3 of the advantages. My only focus is that line inside of triggers. That's my entry. And that's how precise the entry becomes. Does that make sense, OG? And I think what happens, and it's human nature, is I want to give importance to this, to this, to these, to that off in the distance. And the reality is, let the large chart lead the way. Let the small chart be your entry chart. And you'll notice that it's just a pattern. So that was from the 6th. There's the exact same pattern on the 21st. So again, look at it. There's momentum. First, it's momentum. Then it's at least the potential to break. And then it's nothing more than a pullback to an area inside of triggers. And it is 100% repeatable. It's testable. Here we go again. First, it's momentum. Then it's the potential to break. Then it's pull back to an area inside of triggers. And you can go back and study this. Let's see if we can find an example. Let the fat ladies sing. Check it out. Do you see the momentum and the potential to break? Price didn't reach that one yet. Looks familiar, right? Watch this. What's it look like on a smaller, faster chart? Let's go find out. And I don't know. I sure hope this lesson works. It's a pullback right to an area inside of triggers. Do you see it, OG? Large chart says let's go up with the potential to break. Small chart says this is where your entry is if you're going to do it. That is the point where the market is most likely to continue if it's going to continue up. We'll do it again. I'm going to circle the tail. The tail isn't your entry. The pullback to the area inside of triggers is your entry. And there's the pattern again. And we can back it up, and then there's the weekend consolidation, right? Are we going to do it again right here? First it's momentum, then it's path, then it's entry. Know where your rules are met, right back to the mid band inside of triggers. I didn't take pictures of these. I didn't handpick these. I'm literally just scrolling back from a live market and saying, wow, this pattern seems to repeat over and over. Boom, this pattern does the same thing over and over. So you don't have to know what the stock index is doing. You don't have to know what the news is. You don't have to know what's going to happen next. You've got to know that if price reaches an area and the triggers don't break, there's no reason to trade into the area. If the colors don't match on the large chart, you don't have momentum, you can stop looking for a trade instantly. No reason to even look at a small chart if your large chart isn't giving you what you need. Humans complicate things. I know I did. So go back and take pictures, guys. Go back and take pictures of momentum. Go back and take pictures of termination conditions. Go back and take pictures of perfect entries. And until you do it, or while you're doing it, whoops, wrong one. Guys, here's the basic rules. Strong triggers, clear path, right there. There's about 500 pictures of that pattern coming through from Nexgen users, dropping them in the room. We're not looking for trades. What we're looking for is a pattern that we can prove wins more than it loses. There's the momentum, potential to break, pull back to an area, inside of triggers. That's from the spreadsheet. Here's one going the other direction. First it's momentum, then it's a clear path. Look at the entry. Pull back to the area right inside of triggers, guys. This is a Nexgen user in the December 24 contract of crude oil showing his live entry. And it's the exact same pattern. So learn those patterns, guys. Learn those very simple rules so that you can turn them into a trade. And that's TradingView, or that's NinjaTrader, guys. TradingView is I think it's pretty cool because TradingView is like a throwback to 2024 or 2004, excuse me. And guys, there was a trend trade that Nexgen was teaching in 2004. One of these days, I'll get the date right. That said, pull back to a mid band, close on the correct side of the triggers, and take your trade. This is the same trade that I'm about to discuss on TradingView. TradingView indicators are very similar to NinjaTrader. You will see divergence highs and lows. You will see one-to-ones. There's a mid band. But what you won't see on TradingView are Fibonacci areas. Programmers haven't figured it out yet. There's a company called Chart Prime that creates areas of supply and demand. It's 100% automated. I think it's fantastic. I don't tell you guys how to spend your money. I teach you to read indicators, but I can tell you that I've never regretted my investment on that. If you're not interested, if maybe you're in the evaluation process, guys, let me know. Whoops. And there is a free indicator that you can use. It is available. I'll make sure that you have access to that. TV is they're having an amazing sale right now. 80% off Black Friday. Guys, your TradingView doesn't use dynamic Renko, it uses minute bars. And your large chart, your big crowd is a 15-minute bar, guys. Most of us could run to the corner store, grab a Coke Zero and a big bite and get home before that bar ever prints. So we're using the large chart to define direction, momentum, key targets, terminations. On my workspaces, I've gotten rid of the large triggers. It's too slow to need them. On my workspaces, I've gotten rid of the background color because you're going to miss a lot of trades if you're only going with background colors. So guys, there's fewer moving parts. Your 1 minute chart, that's your small chart. That's the small crowd. That's the fighter. And it defines immediate strength and entry points. And David, I believe it's pro, Don't let me lie to you, David. Hold on just 1 second. I want to see pricing. Here we go. I believe it's plus. Oh no, premium. That's my current plan. Premium is the one. You don't need the ultimate. And that'll let you do 8 charts per tab, 25 indicators per chart. So honestly, plus might work just fine. 4 charts per tab, 10 indicators, 10,000 historical bars, 20 parallel chart connections, 100 price alerts. I run the premium, and it's more than enough for me. So guys, big chart, little chart. Slow chart, faster chart. Premium for chart prime. That's what it is. You need premium for chart prime. And I think you need premium for market flow for the bar data. So premium, let's say premium. Your large chart read, guys, is the same read every time. There's one way to do it. I want to show you something. I can even get rid of the middle to get a successful large chart read. Plus and premium, basically the same price on sale. Right on. Premium then. And the cool thing, David, is everything that I'm about to cover right now using TradingView is what you guys can use to beat those evaluations. I've watched a lot of people in the room pass their evaluations using nothing more than a TradingView trend trade. So you guys that may be struggling, lean on this one a little bit. Guys, direction on the large chart is defined by the small trigger direction. It's either down or it's up. That's it. It's either down or up. Direction is the easiest ever. And here's the thing is if you can't tell if it's down or up, if those trigger lines are kind of going pointing to the right, if the large crowd can't figure out which way they're going, why are you going to guess? So let them be very decisive. Let them be up or down. And then really the second question is, do I have room to targets? If I go look for an entry, is there room to make money? Does that make sense, everybody? Direction and path. It's almost too easy. So let me complicate it. There's a middle step. And this is going to define the momentum, guys, because this is going to set you up for management. First, the triggers are up. Can all of my TradingView users give me a Y if you see that the small triggers are in fact up, that they're not down? I'm only looking for long trades. And now what I have to do is I'm going to ask myself, where is the most current price? So the top of the bar in this up, right? Those two corners, where is the most current price highlighted over here in relationship to these small triggers? Now, in the beginning, it may be hard to tell. Draw an imaginary line or draw a real line and extend those small triggers out. And guys, there's only 3 options of where price can be. It's either left of the triggers, it's right of the triggers, or it is smack dab inside of the triggers. And what we're doing is we're using that location to define momentum. So if price is left of the triggers, whether it's a downtrend or an uptrend, you're on the strong side of triggers. This is your odds favorable momentum. This is the best of the best. This is the most likely to break 1 minute areas. Bigger moves look, guys. This is your warm fuzzy look. So when you take the trade, you might protect yourself into an area, maybe take partial profits, but you're really thinking, man, I'm looking for that big chart home run. Now, if you're right of the triggers, whether it's an uptrend or whether it's a downtrend, you're on the weak side of the triggers, guys. And weak has got to ring a bell in your head that says, hey, 1 minute areas are most likely to bounce. From the weak side of the triggers, this is where most traders are getting paid at trouble, getting out of their position, and waiting for the next position. And then if you're inside of the triggers, this is kind of that medium probability. This is where, when I reach the first sign of trouble, I'm taking profits. I'm getting to break even. But it has the potential to go from transition to strong. So I may hold that second contract to see if it wants to go for a bigger move, but I'm not going to leave myself exposed. If you learn strong, transition, and weak, you will know exactly how you're going to manage your trade before you ever enter it. You're going to know whether you're going to be taking quick profits, whether you're going to be holding for bigger moves, or whether you may have to split it up a little bit, one on each side. So is everybody good with that? First it's up, then it's relationship to the small triggers to define momentum, and then it's making sure you have room to trouble. That's the one that tends to get us, guys. It's so important that for the trend trade, the only trade I'm teaching you guys today, the 15-minute must not be trading directly into areas. You have to have room to trouble. And the 1 minute must not be trading directly into areas. You have to have room to trouble. This is the most broken rule, guys. It goes back to that idea that there's a lot of opportunities. You don't have to be in every move. And then the entry rules are pretty simple. You're going to buy or sell a pullback. Sounds familiar. At an area, at a zone, at a one-to-one or a mid-band. But here's the difference, is you need a close on the weak side of the triggers at that area, because the weak side of the triggers, that's where reversals come from. The same reason we manage more assertively on the large chart. So this is your pattern. The smalls are up. They're in transition, and there's room to targets. That's where the small chart is usually trading somewhere around here. It may be even trading here. And you're like, I just want to trade. Why can't I get a trade if I could only get a trade? And then the small triggers roll down. Large chart says up. Now the small chart's pointing down. The moment this happens, you're going to look lower. You're going to look for a fib, or I'm sorry, for a mid band, for yellow one-to-ones, for a zone. And you could even draw a box around it, calling your shots, and say, I need the market to come down to this area. And when it gets there, I'm not just going to jump in as a brand new user. I'm going to force an up bar to close on the weak side of the triggers, because reversals come from the weak side of the triggers. And what I need is that small chart to reverse from trouble so that it continue with the large chart. And guys, this entry is going to demand patience, but this entry is going to put you on the good side of those small triggers, and the likelihood of success goes way up. So when the large chart is down, I'm on the strong side, and I have room to trouble. The moment the small triggers roll up on the small chart, I'm looking for the pullback to the area, to the zone, to the one-to-ones. But I'm not just getting in, and I'm not hoping, and I'm not wishing, wanting, or praying. I'm waiting for a close on the weak side of the triggers. And this initiates the trend trade, because reversals come from the weak side of triggers. Price is finished below. That's when it begins to move in the direction of the large chart. Now, the trend trade on NinjaTrader has decades of repetition. I've done the trend trade on just on TradingView and ended up around 70% as well, give or take. Your results may vary. But the moment those small triggers roll against you, all the way up here, reaches an area, no close above. Reaches an area, no close above. There's your close above, but it's got nowhere to go. And guys, sometimes it's going to be stacked. And sometimes you're not going to be able to find your perfect entry. And you're going to say, dang it, I'm just going to have to wait for a better opportunity. And sometimes those small triggers will be flat, and you don't know if the market's going to go up or down. And it's okay to do nothing. And guys, everything that we teach in this room is taught in a manner that repetition creates recognition. That when you begin to see the exact same thing over and over, when you begin to see all of the momentum, look at this, this is the S&P. When there's room to trouble, let's see where that tail ends up. Right at the mid-band, right inside of trouble. And that was the one, in case you missed that one. Pull back right to the area inside of triggers. So guys, what I ask you to do, and this is what the rest of our class is going to be today, I want you to practice and I want you to simulate and I want you to take pictures. And every time you post a picture, I want you to go through three things. And I want you to say, here we go. Hey, Mr. Joker, first day test, good to have you. I want you to identify momentum and I want you to say strong triggers. And what you're doing is you're saying, hey, Mark, I recognize this as strong triggers. Did I read it right? And I'm going to say, oh, yeah, you did. And I want you to pinpoint that price hasn't reached an area. And I want you to say clear path. And what you're doing is you're saying, Mark, did I read this right? Did we get away from trouble? Is there room to trouble? I see it as a clear path. What do you see? And we'll make sure that you're reading the indicators right. And then, guys, this is where the money comes, right? You can say, I bought a pullback at an area inside of triggers. And when you drop this in the room, when you take this picture and you drop it in just a minute, we're going to start going through everybody's pictures. And I'm going to say, all right, let's see what Mr. Joker did. And Mr. Joker said, hey, Mark, there's that lesson on momentum that you talk about every morning, that separation between the small and large. This is my best look, letting me know that the odds are favorable for the market to continue. And I'm going to say, man, you got it. You nailed it. That's the one. And then you're going to say, and I noticed price didn't reach trouble yet. And I'm way far away from previous trouble. I've got a clear path, which means I've got a market with all of the zip and nothing in the way. All I need to do is learn one little phrase. Buy a pullback at an area inside of triggers, and I'm going to ride that wave of momentum. And I'm going to try and take it to the next Fibonacci area. And this becomes the high probability trend trade. And I'm going to say that is the perfect trade. At which point, he's going to go to his spreadsheet. And he's going to go, well, if it's the perfect trade, I'm going to put it in my trade plan because this is the pattern that I want to repeat. Repetition creates recognition. We'll just call it perfect. And if he took a live trade, he's going to do the same thing over here. He's going to drop his link in there and he's going to say, okay, long trade. And the feedback from class was perfect. This is the perfect trade. Guys, it's not always the perfect trade. Sometimes you're trading into a termination condition and don't see it. We'll have that conversation. Sometimes the momentum isn't outstanding, and we'll have that conversation. Sometimes the entry is not from an area inside of triggers. You get in on the wrong side of the triggers. And guys, we'll talk about every bit of it. And we'll say this is why that trade probably failed, because you didn't have rule number one. And while it looks like you almost had rule number two, you couldn't define your entry, and look what the market did. And then with all of that momentum and nothing in the way, the market pulls right back to an area inside of triggers, and down it goes. And you guys are finding ways to make money both directions. And that's what we talk about every day. And it may take you a day, and it may take you 4 days, and it may take you 6 days to get really, really comfortable with it. But until you're really, really comfortable with it, don't stop asking questions. Don't stop posting in the room, guys. I'm here for feedback. I'm here to help you with everything that I can be helpful with. And the only way I can do it is if you say, hey, Mark, this is what I did. What do you see? This is what I saw. I saw momentum. I saw a clear path. I saw an entry inside of favorable large triggers. Did I see it right? That's all you're doing. You're saying, did I read it right? I know you're here to help me read indicators. I saw that it was up and it was on the strong side and I had room. Did I take my trend trade correctly? Because I want to make sure that I'm giving myself the highest chance of success. So As we get into the second and third hour, guys, we're going to watch the live market. If the rules are met for the plans I give you, we'll enter, we'll manage, we'll have a good time. Same thing is true on TradingView. If we can find rules met for the trend trade, we'll take the trend trade together for educational purposes. Now, I'm also going to give feedback on the charts that are posted. I am not the trade police. I don't want to be the trade police. That's outside of my pay grade. So as we get into the second hour, this is what I want to remind you guys. The keys to everything that we do is having a foundation. And we build that foundation in the first hour. We build the foundation of momentum, of a clear path of defining an entry. If you skip your foundation, you're going to find trading difficult. If you lean into those ideas of momentum, path, and entry, you're going to find trading very stress-free, I think. Get good at the basics, compound a little bit each day. So for you very new users, this is what bums you guys out sometimes. For you new users, I blanket you with very conservative rules. The high probability trend trade is boring. Doesn't happen all day long. And I talk about recognition of advantages, not looking for money, not looking to get rich, but rather recognizing an edge. And I hand you a solid plan that optimizes your chances of success as you learn to read your indicators. So if you're brand new in my room, it will feel like all termination conditions are bad, that not having momentum is bad, that areas beyond large triggers for entry are bad. And these are blanket rules because it increases the likelihood of success. And guys, confidence comes from the memory of success. They're not always bad. You're going to see that in the second hour. When you have a little bit of experience, you'll know when to make exceptions, guys. But just like anything, the more time with it, the more you're going to see. That's when doors begin to open from that foundation. So learn the process that yields the results, and the results seem to follow. That's where the KISS plans come in, guys. If you keep it that basic, if you focus on simple rules, and most importantly, if you're okay not looking for all the trades, only the best trades, you can find an extraordinary level of success. I have watched it repeatedly over the years. The further new users deviate from simple, the longer they tend to take to be comfortable with the pattern recognition. You guys chasing everything, and there's a lot of you in the room right now going, yeah, that was totally me. I wanted to be in every trade, and the only ones I seemed to find were the losers. Guys, question everything, but learn the process. Post everything you do. Learn the process. Guys, I want you to learn, but I also want you new guys to give yourself a little bit of grace. You are brand new. It's okay to be brand new. And whether you are brand new first week with the software or you are brand new having this born again, I'm going to follow a plan, guys. Give yourself a little bit of lenience. It's okay to be new. Be very, very vocal in my room. Be very, very focused on advantages, and we'll just all end up right where we want to be, right? So the small triggers are up. I'm on the strong side of the small triggers. Does everybody see that I have nowhere to go? On the large chart, I'm directly into one of those zones, which means that I don't even care what the small chart says. I don't have the first rule of looking for a trend trade in play. Small triggers are up. I'm on the strong side of the small triggers, and once again, I have absolutely nowhere to go. I'm stuck inside of one of those zones. I need it to break. I need the market to roll. I need something to happen to give me a clear path. And until that happens, I simply don't have a trade. My small triggers are down. My large triggers are up. I don't have momentum. Price reached all the Fibonacci areas. None of them got above. I don't have any resemblance of a clear path. There is no reason to go to the small chart to look for an entry. My large triggers are down, my small are below. I've got amazing momentum. Rule number one is met, finally. However, price reached Fibonacci support. None of my triggers broke. Look at the reaction that came off of that support, guys. My rules say, the KISS plan rules say, no trades into that area. So I either need the area to break at least 3 triggers through, or I need it to bounce and punt me up above these areas. I need a clear path before I can look for a trade. Does that make sense, everybody? Adam P, what you did, Adam P, is you gave me a picture of your screencast link. I need the actual link. Does that make sense? That's, are you pulling it from a spreadsheet to show me? This happens every now and then. Yeah. So when you pull one from the spreadsheet and you right click, go not to copy, but go to, there should be one that says copy link. Or maybe you'll need to open the hyperlink and then copy the address. Let's see. I know that one works. So let me try and see if I can recreate what you did. Right click, copy. Oh, you got it. Awesome. Yep, if you right click copy, there it is. There's that picture. Cool. Guys, I'm going to take 5 minutes. When I come back, we're going to start looking at all of the charts. Todd, I had a workspace that I built and something was corrupt in it. And because it was corrupt in it, instead of trying to just fix that, it takes 10 minutes. I deleted all my workspaces I created. I got rid of all my templates and then just reloaded it. And then on TradingView, true story, Todd, and I'm not proud of this, but it is what it is. I went through my layouts because I had like 100 of them and I deleted them all. And when I deleted them all, I even deleted the ones for the current workspaces. So I had to go through and rebuild everything. It was an OCD cleanout that backfired on me. That's the wise. That's the wise. Happens sometimes. But to completely gut NinjaTrader and reload, like first Monday of the expiration contract, I think. I don't remember that stuff. NinjaTrader tells me. So what's the current contract on the S&P? We are in December, right? We are in December. So I believe it's going to be the first 2025 month 12. 12/19 is the expiration. So I believe that the roll is, yeah, will be the 15th. There you go. I'll give you the link to this too if you want to look at it. If you're in NinjaTrader, it'll always prompt you. And then if you're in TradingView, they're just continuous. When the volume switches to the next contract, it'll switch as well. No effort on your part. All right, guys, I'll be back in 5. Go stretch your legs for a minute. All right, guys, here we go, second hour. I'm gonna click on all of the pictures presented. Excuse me. And I'm gonna say something real quick. Please put your listening ears on. I was just having this conversation with my wife. Language is important. So we're going to use the same language. We're going to use the language of momentum and strong triggers. We're going to use the exact same language to identify termination conditions. We're going to use the exact same language for entries. And what you're going to find is that when you can repeat the phrase that it takes to enter the market, when you can repeat the phrase that describes the advantages, it becomes faster. The recognition becomes faster. So if you're new in my room, I'm going to encourage you to learn the very simple, and then you're going to find the trades from that simplicity. So Paul got us going today, and large chart read, 15 minutes or down, strong side, he was over here, and the path was clear. So on the small chart, it looks like he pulls back to the mid band, to the zone, and he waits for the close below the small triggers. And that is the absolute perfect trend trade. And he gets one at trouble, and he tightens up on the second one. Nope, he gets paid the second one at the next level of trouble, at the outer band. And Paul, I hope you're in the room. Guys, this is it. That is $375. That is one trade. That's 2.5 minutes of Paul's life. That is the perfect trade. Nicely done, Paul. $15-minute down. Weak side of the triggers, letting him know, hey, I'm going to have to manage it. And he's got room to trouble. And what happens? The market pulls up to the zone. You can see it pulling back. Doesn't close below, doesn't close below, finally does. He takes an entry. And from the weak side of the triggers, gets right out at trouble. Nicely done. Another 350. Guys, for most of you, that's day over. That's 375, 350. That's going to be what? 7.25? I want you guys to see something pretty cool about day trading that most people don't realize when they show up to it. This is my daily goals sheet. It takes $400 a day. That's it. $400 a day to put you in a six-figure income based on your trading. There's 252 trading days in a year. If you can average $400 a day, which means some days you might make 100, right? Other days you may just go gangbusters, make 1,000. But at the end of the year, if you average out to $400 a day, that's it. That's all. That's not much. That's six figures. And Paul, you are well over the $400 average today. That's where a lot of you will be like, okay, I'm going to go swing some golf clubs. I'm going to go take a walk. All right, Victor. Trend trade. The trigger's up. Price is on the weak side, and there's space to the next area. Small chart pulls back to an area. Triggers roll. Price closes on the right side of the triggers. Entered the trade. Managed out at the next trouble area because of the weak side. $240. It's a beautiful trade, Victor. Do you guys see it? It's the same thing, right? Define the direction, understand your momentum, wait for your perfect entry. And they don't all work. And you're going to see some that don't every now and then. Market reversed, strong top, odds favorable momentum, only 2 trigger lines through. And here's one thing that I wanted to point out. It's 2 trigger lines through, potential to break. 3 is your better look, but it's 2 trigger lines through these areas. There's like 3 areas we're hoping breaks. We're already seeing divergence right from Fibonacci. Does have momentum. Pete jumps in and says, nope, this one's not going. And he manages out for a small loss. It's okay. And then when the area holds, 3 divergences help him recognize it. Pete says, wait a minute. That fib isn't going to break. Let me get the apology trade. When all of my indicators roll up, I'm going to ride the momentum up and just get my money back. Nicely done, Pete. Great heads up trading. It all starts with momentum and path. Trend trade, triggers up. Price in transition, space to the next area. Small chart, there's your pullback. There's your close above. There's your entry. There's your loser. Now, as a brand new user, you're going to say, man, it lost. What did I do wrong? Victor, did you do anything wrong on this trade? I can't find it if you did. First it was up, then it was transition, and it was room. Everything said look for an entry. The entry is perfect. Guys, it just didn't work. They wanted to push down. They wanted to go lower. We're not in control. Victor, I would, in normal circumstances, I would say, Victor, I would be willing to take this loser with you every time. Victor, here we go. I took that loser with you, 100%. I took that loser with you because it fit the rules perfectly, and then I grabbed hold of it and got it all back. It's the perfect trade, guys. Trades that win 70 to 80% of the time, they're obligated to lose 20 to 30% of the time. So always go back to, did I follow my rules? Did I follow my plan? Did I give myself the advantage? Victor, I love that trade. And Victor says, I'm going to get it back too. Everything is up, price and transition, space to the next side. Small chart bounce from area, that would be it right here. Could have gotten sooner, waited, got in late in the area. So I suffered through 3 bars of consolidation. I would say 3 bars worth of pullback. Traded directly into an area, Victor, and then had to suffer the bounce. And it was a big bounce. That was a 14-point bounce. That was 280. That was $560 against you on this particular trade. And it does go up right where the large chart said that it was likely to go up to. And I'm glad that you held. And it was just the continuation of the perfect trend trade. That's your entry right there. But you were probably too busy, pissed off that it didn't win, right? That's your entry from 82. It's just late. You got lucky. You traded directly into an area. And Victor, I don't know if this is what you were saying, but I'm just gonna play a game here. I hope this area breaks, right? That's kind of what you're saying. If you take this trade directly into trouble, you're saying, I hope this area breaks. This is what hope does to your management plan. I'm down over $500 trading into an area. Let me put my stop further back and hope some more. And Victor, I don't know if that sounds familiar with what you did in that particular instance, but this is what happens, guys. When you hope trades are going to win, you hope that your ridiculous stop doesn't get hit. When you hope trades are going to win, you hope that it breaks through those areas that could stop it. When you say, my rules say, this is where my advantage lies, my rules say, get paid here and go break even, you begin to work through eliminating hope. Paul, it's familiar to all of us. Everybody does it. I sure hope this area breaks. And then when it doesn't, you stay in the trade. And that can become problematic for long-term success. Pete, your first trade is back here. Momentum potential to break. You jump in with no room to the one-to-ones and it bounces back, turns into a trend trade. And then it does everything a trend trade should, and you get paid. Nicely done. And then Pete says, you know what? Let's let them figure it out at the fib. And then when they break above it, I'll trade into this trouble, not into this trouble. And it works out. Everything says up. Pete, you go up with it. I'm not sure why you took this one, right? But you did, and it worked out. It was getting weak. Weak triggers, 2 through. It's a tight trade. That is years of expertise coming in saying, man, I'm gonna thread the needle and try to get paid. Everything says up. I'm gonna hope it goes up with it. And guys, you'll get to a point to where you start doing that. If you're not there yet, if you're not reading your charts really quick, those become a little more difficult. Take 10 ticks any day. Yeah. And or lose 15 trading directly into a termination, right? This time it was taking 10. Termination, all the momentum, super strong triggers. There's the pullback to the area, and it just missed him. So he gets it on the way down. He's like, I'll take a later entry on the perfect trend trade. And then the market goes, oh crap, we forgot Pete. And they come back for him, and Pete's like, well, that was really nice of you, market. I'll add 2 more on because this is the perfect trade. And then just Downsville, population Pete. These are the easy ones, guys. These are the ones that you can say without hesitation win more than they lose. These are the ones with absolutely nothing in the way. These are the ones with all the momentum. And once you learn this trade, once you can do this, you start seeing stuff like this. These start to jump off the page at you. But if you can't do this perfect trade, you're going to struggle finding the more difficult ones. All right, Andy, lost the short. Happens, right? And when the short loses, you take the apology. And guys, this happens sometimes. Andy had momentum. He had path. And the challenge, Andy, was that it was a weak top, which means the mid-band is more likely to hold. You take the perfect short trade. Doesn't work. And then when everything rolls up and says, nope, we're not going any lower, you said, cool. I'll ride that momentum up and I'm going to make some money. Nicely done, Andy. Great recovery. There was a time in my life when I raced motorcycles, and they used to tell you that the difference between a novice and a pro wasn't necessarily how fast you could go, but it was how quickly you recovered when things didn't go right. And that's one of the things that you'll begin to see with the more experienced traders is that they don't miss the next entry because the first one didn't work. It's done, it's over. They use the phrase next, and they're looking for their opportunity. Andy, man, nice job. Market reverse out of nowhere. Triggers strong. Market pulls back to the area inside of triggers, bounces, says nope, not quite. And then there is the next one. I like it. Stop where the market shouldn't go. Getting paid. Oh, and they head faked you on a tick before they went. This is one of those trades when you wish you didn't have a trailing profit stop because the market kept railing, but I don't regret it. I made money, and a trailing profit stop has saved me more profits than missed runners. Amen, Pete. When you take the time to type that out when something like this happens, it reinforces that you're here for the long term. Nicely done, Pete. Andy V, jump the fudge in. Oh, you've got a picture with it. I'll get to it in just 1 second. I believe this is Adam, right? This chart kills me. The 2 diagonal lines indicate your long trade window. Your white circles are possible trades. You don't take this one because you're still going down. I don't disagree. Same deal, 1-to-1's termination, slightly higher, still close to resistance. Slightly higher, still close to resistance. And it looks like you just said, forget it. I'm done waiting. I'll take the one with divergence off of resistance. Finally take this one even though you have hit resistance right on the nose, but the large chart is clear and you have room and it goes against you. And man, that's trading, isn't it? So let's look at it. Don't take the first long because it's all down. I like that. Divergence from the fib. I could see that. What about this one? Adam P, are you in here? What about that one where it wasn't divergence from the fib, where we got above the previous problems, where the entry was pretty well defined, and it does go to resistance? And I know that's probably not, well, it's going to be close a lot of times, Adam. And you're going to see that. You're going to see it close to the fibs. And this is where we start looking at triggers and where it's coming from. And that's kind of the small chart nuance. And honestly, man, I could make a case for not taking that one. And I could also, I could after the fact, without the adrenaline, make it both ways. Ooh, you just said it seems like there's always something in the way 90% of the time. I love that you said that. Have you ever seen the part of my classroom in the beginning that says 90% of the typical day is doing nothing? It's crazy, Adam. Everybody's got a different fuse, right? Some people can wait 5 minutes before they break a rule. Some people can make 2 hours and 5 minutes. And you just got tired of waiting. And it was 7:42 on a Monday. And you got tired of waiting. And man, we've all been there. We really have. I like the little channel. I like it. And your patience is good, and the lessons are solid, and your adherence to rules is beautiful until you just finally said, dang it, I need to be in a trade. And that's Murphy, square in the can on you. But you're absolutely right on your patience. I don't disagree with any of it. Strong trending market, buy the mid-band until it doesn't work. And Boaz, you said, I don't want to just get in hoping it holds. I'll get in with confirmation. And up it goes. Really nice trade, Boaz. Guys, when you've got a market that's 30 bars in the same direction, when you've got those small triggers riding, this is what we call a strong trending market, which means that momentum is understood. The path is definitely clear. And the conventional wisdom is keep buying the mid-band until it doesn't work. And it's going to keep working right up until the last time it doesn't. And Boaz says, you know, it's below the triggers. I've learned this one the hard way. I'll force it to go in the direction of my trade, and then I'll take an entry. And it works out really nice, Boaz. Great job. It's hard to wait for that reversal bar. Guys, this goes back to the concept that you're in charge. Nobody can ever make you take an entry, right? And the hardest thing you'll ever do is not take an entry. Strong triggers, just no room at all. You jump in, and there's just nowhere to go, Pete. And it bounces, third divergence from a fib, and you hold your position, and you win. And guys, sometimes you're going to get lucky because the market loves you. And you missed the add-on. You missed the add-on trading directly into a Fibonacci area with 3 divergences. That's what you're saying, Pete? Because it went down, you missed your add-on directly into a fib with 3 divergences. Okay. That would go against everything that you've shown me. Because when you see this, you stop taking shorts and you start looking the other direction. And I could scroll back and find 100 instances of that. There's one from this morning. You got to do what's right for you, but consistency pays the bills. Pete's at a point where he knows I'm going to rib him a little bit, but Pete's also at a point where he knows what his plan is, and he knows where he's getting in, and he knows where he's getting out. All right, Adam P., let's see if the market came back and showed forgiveness. Auto entry, smalls above. Like it. Smalls above, large above, everything above. And then let's see where your entry is. So your entry is right here. Probably should not take this trade. Wait for a reversal bar entry. Ended up stopped out, bounced off of support. Then large charts are in the wrong direction. I don't disagree with the reversal bar idea on that one, Adam. And again, large chart looks amazing, right? It's that damn divergence from the one-to-ones. I love a confirmation bar there. And if you look at your small chart, if you look at the big picture, couldn't go up, couldn't go down, 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 right? So there's a huge fight going on. You took a good look. Large chart said, man, we got a shot. Termination, odds favorable. You're good. Small's above the large. There's room to trouble. And that divergence, that one-to-one divergence, same as that one, and that one, and that one. Are there any more? That one didn't have divergence, but the one just below it did. That's your red flag. That's the red flag. And you're absolutely right. You can wait for a reversal bar. Adam, I don't want to go too deep into your management. Are you with me in here still? Have you ever seen this? Not in here, I guess. Maybe. Guys, you NinjaTrader NASDAQ users, I'll put the picture in the room for him so that if he comes back, he sees it. Okay, you are here. Cool. One of the things that that I noticed, Adam, and I blew out a lot of accounts learning this lesson, is the small triggers on the entry chart, because they're a 13.2, they carry a little more weight. And a lot of times they'll behave as resistance or support. So one of the things that I look at, if I get too deep into a move, and I'll show you what I mean. And I'm not trying to add things to your management plan, but one of the things I'll notice is that when these small triggers really start coming down against me, the divergence from the one-to-one says, okay, I'm going to pump the brakes. But the strength of the small triggers says, hey, I'm not just going to wait for a reversal bar. I'm going to let it finish on the weak side of those small. And you can kind of see it as you come through. The market doesn't even begin to push up until it closes on the weak side of the small triggers. And while that might have been a good look for short, it doesn't even start down until the weak side of the small triggers. And that may have been your long, and it doesn't start up until the weak side of the small triggers. And this is one of the lessons that I had to learn. And man, it was a lot of pain coming at me. Is that if the small triggers are less than a full bar away when I get to my entry spot, very often, if it's not the perfect trade, right? If it's not everything singing in the direction, I just wait for the close on the correct side. And it's very much like that minute bar trend trade. But if I get to my area for entry, Adam, and those small triggers are still up or they're way above the reversal bar marker, I'll get in at the area and then I'll keep eyes on it when it reaches and make sure that something weird isn't happening. Does that make sense? For me on the NASDAQ, that was an absolute bacon saver. And what it did is it kept me just a little more patient. I like your look and I like the thought of the reversal bar. And I think that it was just one of those things where it's like, okay, that little bit of patience might have paid dividends. Large chart was perfect. And the other side of it, guys, is we try to rationalize why a trade works or doesn't work, right? Sometimes the perfect trades just don't work. But sometimes the worst trades you could ever take work beautifully. And you got to know the difference, which one provides an edge. Andy V, jump the fudge in. Delayed entry 30 to 40 seconds, was able to move profit target stop loss one time. Price went way beyond the profit target before closing. Have tested. Chart appears to be working correctly. It may have just been screaming too fast to pick up. It may have been so fast it doesn't, but it was up, strong side, nothing in the way. Jump the fudge in and make a little money. Nice trade, Andy. When everything says up, strong, nothing in the way, that market's going to be hard to stop. Andy V, you knew that, you took advantage of that, and you're able to turn it into some profits. Odds favorable momentum. You entered, it didn't show up for 30 to 40 seconds. Did it enter at the price you wanted to be in? Or did it enter higher than the price you wanted to be in? That's weird. That's a big delay. 30 or 40 seconds is a pretty big delay. I can't see up top, but it looks like you're on live data. And I don't know, is NASDAQ right at the open? There's a good chance you just got slipped, Andy. Because the NASDAQ at the open is like purebred, thoroughbred coming out of the gates. And there's a good chance you just got slipped right off the open because you're right there, 930. And Rhythmic has been having issues all last week, Marlon. I didn't know that. Odds favorable momentum. Nothing in the way. Jump the fudge in. You've reset many accounts. And get out all the way up to trouble. Nicely done, Pete. Momentum and path. That's the easy ones. And guys, I'm going to tell you. I don't know why I say that. Because all I'm doing is telling you, right? When you take trades that have every advantage and are effortless, like this one, it gives you wiggle room, guys, to take the medium probability trades that need to be managed more assertively. If I'm absolutely padding my account with the perfect trades, right? With the momentum and nothing in the way trades, with the perfect trend trade that he took earlier, well then trying to thread the needle every now and then, and I think it was this one. Nope, look at that, perfect again. Oh, trying to thread the needle, come on, dang it, perfect again, Pete. You're killing me here with my example. Ha, trying to thread the needle. Actually, that played into my example perfect. When it's easy, when it's effortless, when it's perfect, you can get by with one every now and then. And if it doesn't work, who cares? The market's full. The account is full from all the good ones. So that's a good example there. But that was funny how I kept missing it and it just supported my point. Good stuff. Hey, look at that, guys. We made it through the pictures. Uh-oh. Here's the hard part of trading. Do you guys want to play along with me? And we're talking about this bar right here. Watch this. Does everybody see that it had momentum? Smalls above the large, larger wide, space between. Guys, this is the perfect strong trigger look. Give me a Y if you see it. Don't look at what happened after. Look at what's happening in the moment. Strong triggers, guys. That's my favorite look. That's a look that tells me the odds are favorable for the market to go up. Do you guys see that there's absolutely nothing in the way? I mean, nothing. This divergence bar didn't print till all the way down here, this line. There's nothing. It is clear skies above. It is everything clear behind us, guys. This is the perfect sexy as all get out look on a large chart. if I had one look, if I could only have one look on the large chart, this would be it. And it's even coming from a termination that reversed it. It's a strong bottom. Guys, my entry rules when the large chart is perfect say buy a pullback at an area inside of triggers. Doesn't it? Buy a pullback at an area inside of triggers. Can you guys give me a why if you see that this is a pattern that typically wins 70 to 80% of the time? This is a pattern that more often than not is probably going to end in a win. Guys, they got run the fudge over. Does that make it a bad trade? Does it mean that the methodology is wrong? Does it mean that the divergence killed it, right? Or does it mean that something must have gone wrong? Guys, this is what it means. Someone with a metric crap ton of money either decided to go short right there, or someone that pushed it up with all of their money took profits right there. We didn't see it. Didn't happen. We're trading probabilities, guys. If you go through your trades, if you go through the ones that don't win, and you don't say, oh, I must have done something wrong, but rather you say, what was I working with? What was against me? Oh, okay. I can't win them all. Guys, that's a cost of doing business. I love it when we see something like this because it does remind you that sometimes you're going to take a loser. Victor showed us one earlier that was the perfect loser. Be okay with it. The next one's coming, guys. It's a cost of doing business. Sometimes the market is wrong. Amen. Sometimes the market can't get their poop in a group and they're wrong. Thank you for that, John Novak. And sometimes they can't get through trouble. And you've just got to be patient and just wait for them to get through trouble. They will. The likelihood of the market being stuck right here in this zone for the next 52 hours is pretty slim. You need to update one or more of your indicators. Click the arrow button to the left to expand the indicator list and see details. So let's start there, Victor. Click the arrow and drop it down and let's see what that says. And you're absolutely right, OG. Your nickels and dimes mean nothing to the market. One of my favorite things is when TradingView closes, look at it go up with those triggers. Uh-oh. And now it's pulling back. Wait a minute, guys. Here we go. You got it? Cool. Does everybody see that the triggers are up? The direction is up. I'm in the transition side of the triggers. Not strong, not weak. I'm right inside. And I've got room to trouble. Because my small triggers rolled down, my job is to wait for a pullback to a 1-to-1, to a zone, to a mid-band. And when I get there, my rules say wait for a close on the correct side of the small triggers to take the trend trade. Is everybody with me? We have a trend trade setting up. First it's up, then it's transition, then it's room to trouble. And if I don't get a close on the correct side of the small triggers, it's not my trade yet. I have 36 seconds to think about it. It's either going to give it or it's not. Oh, gee, what I was saying is that when you close TradingView, they give little messages. And my favorite message that they give is that the market doesn't care about your position. Guys, the market doesn't know we exist. The market doesn't know we're here. Your 2 lot means nothing. Hell, your 10 lot means nothing. I've got 8 seconds. Are we going to get a close on the correct side? 5, 4, 3, 2, 1. I did not get a close on the correct side of the triggers. My rules aren't met yet, guys. No matter what my opinion is, I don't have an entry yet. So it may go without me, or I may find that my rules just save my bacon a little bit. Eval 10 lot means even less, Marlon. Yeah. Okay, how many people are on an evaluation right now? And I don't care which prop firm it is. Are you with an evaluation? And you're focused on the money to pass it, right? Everybody? I know I have to make 2250. I know I can't lose 2500. I know my target's 3000, right? How many of you get to your evaluation and ask yourself, what's the process that's going to pass? What's it going to take to pass it? Not monetarily. What's it going to take from an execution standpoint? Is it going to take trading with the trend? Is it going to take having room to targets? Is it going to require a little bit of patience? And I think that's where we all get sidetracked, right? I want to win. Well, I want to focus on what it takes to win. I want to get paid. I want to focus on the process that results in me getting paid. And I think that it's universal among all of us here, guys, that when you shift your focus away from the methodology that you can prove wins more than it loses, very often your results find a little shift as well. That's where we find ourselves over trading. That's where we find ourselves not waiting for the close on the correct side of the small triggers. That one little thing keeps you out of the long. It negates your opinion. And the market's pushing back down, right? And now we're kind of in nowhere land. I'm below the one-to-ones. I'm above the zone. Let's see what it does. Does that make sense, everybody? The large chart hasn't changed. The 15-minute chart hasn't changed a bit. Close above the small triggers here is awesome. Has to be above those one-to-ones as well, though. And I've still got 24 seconds to think about it, which means I'm just going to relax and I'm going to do nothing. And if I get an entry, my stop is down here below the pivot. But boy, that sure looks like a momentum trade short. 6, 5, 4, 3, 2, 1. Technically, the rules are met. I'm in the trade. My stop loss belongs here. What's my expectation? At least a trouble somewhere up here, right? Because it's transition, you could take partials at the first sign of trouble. Does it make sense? First it's up, then it's transition. There's your close above, and it did close above trouble. Is it gonna win? I don't know. Was it worth $2,000 to take it? Only you can answer it. It could push with all that momentum lower. But if I'm on simulator, I'm going to take it. I'm going to annotate it. I'm going to write it out. I'm going to see what the result is. I'm going to stick with it without an opinion. I'm going to stick with it without fear, without regret. It's either going to win or it's going to lose. And when the trade is over, I'm going to ask myself, did I follow my plan? When the trade is over, I'm going to drop it in the room and I'm going to say, did I miss anything? Well, from transition against strong triggers, I might have to sit through some nonsense. Did I break rules for entry? I don't feel like I did. What do I notice in the moment? They're struggling to get back above those one-to-ones, though. That's going to be a red flag for me. I'm not going to manage this trade. I'm going to hold on to it. But if all I have is 2 ticks above these one-to-ones saying, yep, they're cleared, and it can't get back above them, I've got to get my management hat on. We're going to let this one ride out, guys. Simulator is for taking every trade. Simulator is for not hesitating. Simulator is for going through the process of following the entry rules. Even if there's a mistake, you may not notice it in the moment. but saying the large chart's leading the way. The large chart is up. The large chart is transition. It's almost weak now. In a real world scenario, you might be a little nervous going on right now. But on a simulator, take and manage. Take it. Let it ride out. See if it goes. Yeah, I believe so, Tony. Eddie over at Easy Trading Computers is good people. And I do believe he does give discounts for Nexgen users. And if I'm not mistaken, I follow him on Instagram. He's doing a big Black Friday thing right now too. All right. Never went where the market shouldn't go. That's kind of nice, right? Now it appears to be going in the direction of the trade. I am on the weak side of the triggers, so if I do get partial profits at the HVA, I'll probably go break even because I'm not on the strong side anymore. Gonna let it play out. My trade, if divergence up, then it will go up. We'll see what happens. I did notice the white bar, I'm below it, but John, we're just gonna let it play out. Close on the correct side of the triggers. We'll take partials at the first sign of trouble. Now we're on the weak side of triggers, and honestly, from the weak side of the triggers, I'm gonna take them all off at trouble. And now I got small triggers up. I've got an HVA to support me, right? I am on the weak side, and the weak side's not my best look. But I'm not going to do any management. I'm not going to do anything other than, oh, it tapped us. I'm just going to leave my stop in place, guys. I'm going to let it play out because I'm learning. I'm a student. I'm trying to just get my groove on, my mojo down. I'm trying to learn how to trade with a large chart. I'm trying to learn how to time my entries. Well, there we go. There's a winner. Per the rules, 100%. How'd we do on that one? That's an $1,100 moment. And now I don't care what happens next. From the weak side, I know this area could create a bounce. I'm going to get paid right at it. Don't care what happens next. There's my trade. And John says, but Mark, if you give yourself 1,000 things to think about, doesn't it make it easier? It doesn't for me at all. Good exit half. Amen. And it did exactly what John said. And guys, you're going to get two different ideas. And this is kind of cool. This says, don't go short. We got the trouble. You look like trouble. Get over here. And it's breaking through because the large chart says up, right? And John's right. That's a good spot for half. But if you're brand new, if you are brand spanking new, the 15-minute chart read says, from the weak side of the triggers, 1 minute areas are most likely to create a bounce. It's hard to get mad about $250 per contract, even if you were trading a 2-lot, even if you were trading a 1-lot. The entry makes sense. The target makes sense. And then when you grow, watch this. When you grow with the software, you come back and you say something like, next time, well, John, we don't have fibs. Next time, I'll take half off, go break even, and see if they want the large chart target. That's where you go when you begin to develop a management plan. And the cool thing is, guys, you'll never go broke at $250 per contract. Consistently, per the rules, 100%, easy peasy, right? That's the goal. Traders forget the goal is to get paid. And then once you figure out management, you start to get paid more. But great entries create very manageable trades. Great entries reduce risk. Great entries set you up with room for profit. And then you'll grow from that point. You'll grow from that point to where you might say, with everything up, with the perfect entry, with getting half off at trouble, I'm going to hold for the bigger move. Because the market does the same thing every time. Guys, it was the perfect trend trade. And 840.50 would be the goal for the trend trade. And notice that it's back in transition, right? And you've got all this trouble on the 1 minute. That could be your second target. But what I really want to know is, does anybody have a question about why the entry came from the close on the correct side of the triggers? Why we didn't just jump in at these one-to-ones here without the close? Why once the small triggers turn down, it's our obligation to wait for the pullback? Guys, from the point of rolling, we had 1, 2, 3, 4, 5, 6, 7, 8, 9. We had 10 minutes before the market gave us our entry. 10 minutes of patience, of relaxation, of doing nothing until there's something to do. But Mark, you could have got a better entry if you just got in right at the area. Well, the same is true at these one-to-ones, isn't it? But Mark, if you just would have bought the low tick, look what it did. Yeah, but the rules weren't met. There's a reason that TradingView waits for the close on the correct side of the triggers, guys. And that's it right there. Because when it happens, the market's more likely to go in the direction of the large chart than it isn't. That's where your edge comes in, where your advantage comes into play. Pretty cool, right? Everything we've talked about just happened right in front of you. Told you the area would break. They always do, guys. One direction or the other. The areas always seem to break. And now we've got 3 triggers through. We've got all the momentum. The momentum trade happened. They pulled back right to the fib. And they seem to be going up with all that momentum. All right, y'all. I'm going to take a few minutes, stretch my legs real quick. When I come back, last hour. So this is your opportunity. Ask a million questions. And John Novak, nice trade, by the way. Ask a million questions, guys. Force me to help you. That's what I'm here for. And John Novak's listening in. So if you guys make me feel like I'm needed, I may have a job after the first of the year. Fingers crossed. I'll be back in about 5 minutes, guys. last hour. Today's going fast. John says chart reading 101. Let's see what happens. Fibs hold for up. Lower divergence triggers say let's push down. Termination condition. Divergence from 1 to 1s resumes up. I like it. And straight to the fibs. Same thing you taught on the small chart, continuation of a trend, just on the big one, bigger picture. Nice picture there, John. I like that. S&P, weak triggers, clear path, no areas inside of triggers. This would be one of those times where a lot of you would say, I want to go up with the large chart. I'm going to force the small chart to give me a reversal bar before I enter. And that is your right. Price reaches Fibonacci resistance, yellow 1 to 1s, doesn't have the momentum to push through, and right now they're unable. Termination says absolutely no more trades. And then on the S&P, it's a very similar look. Price reaches yellow 1 to 1s. The triggers haven't broken yet. And, oh, that's crude oil. And you can see the market reacting off of that key area. Good stuff. What's TradingView doing? Uh-oh. Whoa. Boy, that was a good looking trend trade, right? Is anyone going, dude, Mark, you missed all the money? I did, because we're keeping it basic, guys. We're learning how to get paid. In real life, we would have caught that one. And now triggers are up. We're again in the transition. And guys, I like to use a trend line. That trend line is the top of trouble, which means that if I take an entry from down here, I'm in trouble. I don't have a clear path. What would you guys like to talk about? What's on your mind? So Mr. Joker, welcome to the room. Who else is new in here? I know we've got some new people. Guys, one of the things I want to share with you, and it's just a funny picture about the learning process. Whoops, where did it go? Well, and I messed it up. Here we go. There's a little bit of language that's got to be learned in the beginning, guys. You're learning how to identify a trend trade. You're learning how to identify a trigger line. You're learning how to identify a fib. Adam P., I got the perfect stuff for you. And on day one, guys, it can feel like a lot coming at you. I know that that's true. I have been on day one myself. One of the easiest ways to slow that down, one of the easiest ways to kind of squash, put a kink in that water hose, is give yourself just a little bit of time. Learn the idea of a strong trigger line first. You're new to the software. It's okay. And then spend a little time working on your termination conditions. Really learn that language. Price reaches an area. Where are my trigger lines? Get to the point to where you can pick these out. And then find your entry, guys. And most people, if they keep it a little basic, a little simple in the beginning, they get to where they want to be a lot faster. If you're always looking for the trade, you're always worked up about the movement in the market. But if you're looking for the rules that create the trade, then you get to kind of focus your attention away from what seems chaotic, and it becomes very, very definable. And once it's definable, it slows the market down a little bit. Management plans. Are we talking about, Adam? Are we talking about NinjaTrader specifically with the automated system? Cool. So one of the things about management plans, guys, and one of the things about everything is you're probably not going to get it on the first watching, right? So I'm going to give you the link address here. This is John Novak taught my room 2 weeks ago, I think. Oh, and then John's given a book too. So for the management plan, this is John doing a full 2 hours and 41 minutes about small chart management, Adam. Really everything that you've been looking for. Um, and then there was one more. Hold on. If I go to the instructions, oh, it pains me to go to the instructions. There goes my man card right out the window. Um, John, where is the first video, small chart management for the automated system? There it is. So there's two for you, Adam, to watch. And then when you have questions, just drop them in the room. I got you, John. I got it. And then John also put in there, they're all on that Discord page. Cool. Thank you. I love this one. 7 Habits of Highly Successful Traders. The book John told me to read every day for 30 days. There's a reason it's a good one. And then there's a NASDAQ Futures Trading Plan Checklist. This is the page that it links to it. Links to it, Victor. Trend Trade System template, 13.2, video description, template settings, managing on small charts, how to avoid losers and pick winners, live class recording, running market replay with and without management, soft close indicator. All of that stuff is there. That's all for the automated. So Victor, that doesn't, whoops, shoot. Hopefully you guys can still hear me. I just accidentally closed out. Did not mean to do that. I hope you guys can still hear me. If not, I'm coming. Here I come. Education page. Whoops. Can you guys hear me now? One second, YouTubers. Sorry, YouTubers. Now they're all going to have to come back. Oh my goodness. Happens sometimes. Oh my goodness, guys. So I think rule number 1 is don't chase links put in the room by my brother because it messes everything up. That's not true. Probably okay to do it, just not for me there. John says the programmer and I are hashing out all of the small chart things and how to do them to the system this week. That's amazing. Looking forward to that. Looking forward to that. Can you guys hear me okay? We're good now? Good stuff. Sorry about that, guys. It's okay. Fortunately, the market's still doing what the market does, right? We're up. We're transition. We have room to trouble. All we need now is a pullback to an area. Hey, Zest. Good to see you. Your face is all blurred out, but that's okay. Welcome to the room. Yeah, it does. And you know, Andy, if that's as bad as it gets, I think we're going to be okay. New and join late. That's okay, Zest. The classroom, fortunately, is very much the same every morning. The first hour is 100% consistent, same every morning. And what we do is we talk about rules for high probability trades. And if you go to, if you want to like see what you missed this morning, all you have to do is go to any of these, and the first hour is the same. And what I do every morning is I'll give you the little rundown. As I talk about what's called a high probability trend trade, and it's only 3 rules. It only happens on 2 charts. And this is a trade that can be proven to win more than it loses. And that's kind of what we do. Oh, I'm going to make it even easier on you. This is a Word document. It's called Trend Trade Simple. This is everything that we teach about those 3 rules in a 2-page document. So it has your rules. It tells you exactly where to find them. It goes over how to identify the indicators, what they're all called, and pictures of them so that you can see them. It talks about why we do it. Rule number 1, what we're looking for, momentum. There's a picture on how to define it. Termination conditions, how to define it, what it looks like when they break. And then finally, the entry sequence for getting you in. And it's 3 moving parts that are put together to create a pattern that you can prove wins more than it loses. And we talk about it every day. And we go through it every day. And we identify the individual parts every day. And that's kind of what the classroom is it's just repetition through recognition, through doing the same thing over and over. So welcome to Nexgen. My job is to make sure you can read your indicators. So if there's any questions you have on any of the parts, all you have to do is raise your hand and you get my undivided and you get the answers that you need. Hypoxic, John, when you have an update for the auto trader, is it possible to put a date on it so we can tell if we are up to date or not? The way it has a version, Hypoxic. So when you go through, that's crude oil trying to do something. Crude oil looks like they're done for the day. I think I have NASDAQ up. So I don't have all the moving parts that I need, but under the strategies, Hypoxic, you'll see a version. 2734 is the version that I have. So you can always reach out. I don't know if there's a way to know that it's the most current. So you may just have to ask John or post in the other room, hey, what's the most current version? You can always reach out to tech as well. Just send them a message and say, hey, what's the most current version? And they'll make sure that you're taken care of. And I'll tell you, I don't even know what the most current version is. Oh, here we go. John Novak's coming after it here. You have plenty of time. There you go. I love it. So guys, we got about another 20 or 30 minutes here. Um, I know that I kicked half of my classroom out. I feel bad about that. There is separation between the smalls and large. That is momentum. And guys, price reached this divergence high. You can see that they tried to break, but they couldn't. That's what we call a pivot stop out. And that's a termination condition, which means that if you choose to enter this trade, you are trading into trouble. You need to be prepared to manage. And sure enough, right off of trouble, there's your big push down, guys. This is one of the advantages. And Zest, you'll see this. You'll know exactly where the market could stop, 100%. And then you've got rules to keep you from trading into that area. That's rule number 2. That's termination conditions. And you'll have rules for entry. And everything is 100% laid out. T3 system under Nexgen education. Right on, hypoxic. Just have a date next to the title. I like it. You guys know some of the best ideas come from you guys. Just little things. Just little things that don't cross our mind and you guys give us the heads up on. John Novak's a good listener. 3 divergence. Boom, boom, boom. Guys, that is the only small chart termination condition. And it doesn't even mean that this trend is over. It just means that it's more likely to push lower, just like it did, before it decides to continue back up. Just one more way. Turkey Day not going down today, it seems. No. Nope, nope, nope. John, is there anything you want to talk about? We've got a semi-captive audience. Golf, man. I smoked my back on Saturday. But here's a good parallel to trading, guys. I went and took lessons, and I tried to do the whole thing without learning the parts of the lessons, and I just floundered pretty bad. And then I went to the golf course and just did the simple stuff, and it worked out pretty well, the driving range. A lot of parallels. You guys see how they didn't make the area yet? That's good. Done for the day. Going to play tomorrow AM. Nice. Holiday trading rules are going to come into play this week. Holiday trading rules are go play golf, right? I'll have to find a tee time for Wednesday morning. If I can. We may have company in already by then. I think we've got them starting to come in today. All right. There's your pullback to the area. Looking for a close on the correct side, guys, and it's a trend trade. The dashed line is where my close has to be above to have me out of that zone. And if I don't get a close above that line, my next one has to be, well, even below that one. And at that point, the trade's probably over. It may be a day of shorter classrooms. 3 divergences on the NASDAQ, John. I'm a big fan of resist the temptation to go between the two unless you're capable. I'm not capable. I don't do well looking at NinjaTrader and TradingView, guys. My brain will always pick the option that gets me into a trade, whether it's the right one or not. So I only watch either TradingView or I only watch NinjaTrader. Everybody's different though. Some of you guys can look at 7 or 8 time frames and do wonderful. Some of you guys, you've been working on it. I just don't do it well. I know my limitations right now. I know my limitations. You guys will discover you can't get used to TV. Marlon, typically when people can't get used to TV, it's because they're treating it like NinjaTrader. And if you do that, if you treat TradingView like NinjaTrader, um, they're just apples and oranges. They really are. One's a minute bar and it's so slow. That's it, Phil. And see, John said no more trade. Mine says that's probably your trend trade long with a close above, and they may not even wait for you. That's why it's very much stick with it. But Marlon, for me, it took like 2 weeks to stop trying to trade it. Yeah, me too. 100%, Marlon. 100%. What are we talking about, Phil? Dynamics? Here, just do this. Let me make it easier for you because now you have them. Check it out. Dun, 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 dun. You're trading NASDAQ, right? Just do this one. It'll make it even easier. Click on the link, Phil. When you do, it's going to open up in your browser. Right here where mine says publish, yours is going to say copy. And you can save it and just open it and you're fine. You don't even have to do any choosing. It's all in there and ready for you. Are you using the desktop? The one that's the pop-out, not the browser? Or are you just using the browser? I think, and this is just me, I think that the desktop app, I like it because I don't have to worry about browser stuff. It gives me a little more room as well. Takes a second to download, and then I like it because on this one, check it out. I close, boom, saving changes, how to feel awful, stare at your account all day, right? And then I just click the little link, and it's like, boom, back. Yeah, I'm a fan. I'm a fan. So we've already gotten the close above. A little bit of momentum pushing down. We got 31 seconds to see if they want to give us what we need. That one didn't actually close above trouble yet. This is the bar that's going to let us know whether they want to go up or down. And we've got 8, 7, 6, 5, 4, 3, 2, 1. Fits the rules. Stop has to go below the pivot. I don't know, even know where targets should be, right? Take them all, sort them out. It's either going to work or it's not. It's either going to win or it's going to lose. And if you're looking at NinjaTrader, John's like, dude, you had all those divergences, right? But if you're only on TradingView, just do what it gives you. Do what it gives you. Accept the consequences on simulator. There's a lesson everywhere. Was there a third divergence? There wasn't a third divergence. Now we're back into trouble, right? Maybe a red flag. We'll see what this bar does. But my triggers are still up, aren't they? And I'm still on the weak side. And I don't have anything until almost 2,500. There's another bar. Really want to see an up bar here. We're back into trouble. We saw this one earlier too, right? Saw the same look earlier where they danced sideways against the immediate strength. Are we going to pull one off again today? I don't know. We'll see. Love to see this bar close up above trouble, back above triggers. As you work through management, a close below triggers here, maybe a giant red flag. I don't know. An up bar would be great. A down bar, it's probably going down. We're in trouble. We're going to let it play out though. My management plan as a brand new user says take them all, annotate them, sort them out. Pretend money doesn't scare me. Guys, if pretend money terrifies you, real money is going to really make you pucker. Oh, there's an up bar after a down bar, but it's right into trouble. We'll see. They're fighting, aren't they? Right at the top of that key area, buyers and sellers are trying to work it out. Whew. Looks like the sellers might be taking the lead here, though. See those small triggers pushing down, those large triggers are still pushing down. They haven't been able to get back above trouble. There's your little pivot stop out. We'll see if they take out the low of that up bar and then head back up. I don't know. Probably wouldn't stay in this one this long, but I'm committed to the distance, and we're going to take a big loser if it provides a big loser, and you're going to realize that simulator losers are not the end of the world. Simulator losers are a great way to learn. Simulator winners are nothing more than a great way to learn. Look at that. The buyers still have something in them. Are there any questions about why the entry was taken? Large chart was up. Weak side of the triggers. Room to trouble. What's the expectation of a trend trade? Typically, it's an outer band or a stop out. It's going to be one or the other, right? It's going to be one or the other. What do you guys want to talk about? We're going to call it short today. We'll let this one play out. Guys, if you think the rules are met, take the trade. Take your picture. Post in the room. Go through the same process every time. This set up, week, which means manage, room, which means go look for an entry. There's your entry. Because the smalls rolled down, I must wait for a pullback to an area and a close on the correct side. That's the recipe every time. Fits the recipe. Oh my goodness, look at that. What a pleasant surprise, ladies and gentlemen. There I was, annotating charts. You guys want to take 3 off at trouble and see if the runner runs this time? We didn't do a runner last time. How do you guys feel about it? Did it fit the plan? I feel like it did. Is it okay to be up $1,300 and go break even and say, well, I'm not going to lose a trade. Maybe I'll take partial profits right here, go break even, see if it runs. Because let's be honest, 16 points a contract is 320 points a contract. I've got over $1,000 in the bank and nothing to lose. But the question you have to ask yourself, did it fit the plan? Was my stop in the right place? And what happened? Are there any TradingView users that haven't figured this one out yet? This is our second trade that fit the rules today, guys. This is it. Second trade. We're trading a 4 lot. We're up a little over $2,000. Simulator money. It's not real money. Could we just see if the last one runs? We'll use small chart management. Now I've got odds favorable, momentum up. No, this was, see the 1-to-1s, Phil? It was a pullback to the 1-to-1s on the 1-minute chart. The reason I put the line from the 15 minute is my entry has to be above that. If not, I'm in trouble. Like literally, I'm in trouble. So see how my entry where I got in was above the 15-minute trouble? Ta-da. Odds favorable momentum. You said need out. We'll see. Give me a down bar with odds favorable momentum. Follow it with an up bar. We'll tighten our stop, Boaz. Everything on my chart still says up. Doesn't it? There's my down bar. Watch this. This either gives me an up bar or I'm out on the second down bar. With strong triggers, nothing in the way, down bar, up bar. There's my management. I look at all the dots. Green dots, pink dots, green dots. All the pink dots, down bar. So we've already made 1,000 plus, or 900. We've got 155 locked in. And I don't have a reason to exit yet. Yeah, it's going to be different, right, Boaz? Ninja said don't even take the long, I think. And this is why I only look at one platform when I'm trading. Because I really will. I will latch on to whichever one puts me in the trade. And guys, if they come get me, that's cool. And if they don't, that's cool too. I don't care. I already got paid. This is a runner. So I'm letting runners do what runners do. They either run or they don't. But nothing on any of my charts says down. Does that make sense? How we doing so far? Is anyone like, oh my gosh, is it really that easy? That's all you have to do is follow the large chart and take your entry? Can't even see my target. It's 3 days above. Honestly, outer band for a trend trade is an awesome target. So now I either make 885 on this contract or I make 155 on this contract. And I've already gotten paid 3 contracts right at the thing that could cause trouble. Did anyone talk themselves out of this trade? Did anyone see John Novak's Ninja Trader chart and say, oh no, I can't take this trade? I've done that. I've done that. What's Ninja Trader say? Let's go look. Ninja Trader crashed. It doesn't say anything. Well, this is the one we're going to end class on, guys. So I'm going to go ahead and stop. Actually, you know what? I'm not going to stop the broadcast yet. We're going to take this one to fruition. We're either going to get our outer band or they're going to get us. How are we feeling about it, though? Is anyone nervous with all that money, all that pretend money in the bank and nothing to lose? Pay attention to your feelings, guys. If you're nervous right now with odds favorable momentum and nothing to lose, you're going to be terrified in the live market. Oh, that's actually the third divergence. Oh, yep, 1, 2. Well, it's a little higher. Probably coming for us. But that's okay. They might not. And if this is an up bar, I'll move my stop behind it a little more. Nope, another down bar. If this is an up bar, that's a pivot. That'll be a spot for a new stop. Guys, we'll be able to lock a little more in. Really need an up bar here. Need some sort of pivot to lock in behind. I'm just talking through it. Do I sound scared to anybody? I hope not. I sound nervous or indecisive. Does my management sound like it revolves around my guts and not my plan? Give me that up bar. We'll lock some more in. 6, 5, 4. No, go the other way. No. Oh, that was an up bar. Technically, I got 240 locked in. Now I'm on the wrong side of the smalls. I'm below an HVA, but look at my large triggers. Who cares? 240. Come get me. Maybe I need a snack. I don't know. Everybody ready for Thanksgiving? Smoking turkeys, frying turkeys, roasting turkeys, turkey hash, turkey pot pie, turkey sandwiches. How long have we been in this trade? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Ah, we're on our 14th minute, guys. I want to see something real quick. So, oh, they got us. That was 11:45 in 14 minutes. So 14 minutes times 60 seconds divided by 11:45. Is that right? No. $45. There we go. $82 a minute. That's not so bad. This is why you don't have to be in every move. Find the best moves, follow your plan, make your money, GTFO, guys.